accounting for work in progress. Accounting for work in progress. That's what we want to look at today, accounting for work in progress. Now, you are an accountant, okay? You are an accountant. Employed in a manufacturing company. And notice that this company manufactures, your company manufactures a product called X. Product X. This product goes through some processes before we get the output. This product goes through some processes before we get the output. That means we have the input somewhere. That's the material. And also we have input in terms of labor. We have input as well in terms of overheads, and so on. Now this is what goes into producing X. Now, this product X goes through some steps. Step 1, step 2, 1, step 2, and step 3. For us to get product X. Now, you are told at a given point, that is at the end of financial period, that you account for step 2. That you account for step 2, for example. Now, in this step 2, you will notice that there are some products coming, some materials coming from step 1, and then there are some going step 3. Now, in the process, you will notice in under this process 2, you will end up having, at the end of your financial period, some products that have been fully completed, complete units. Okay? There will be some fully complete units that are ready to be taken to step 3. But in the process, you are accounting for step 2. You are noticing that because the production is continuous, it is a continuous production, that there is no point at which there will be a stoppage for accounting to take place. So there is that continuous production. Then there are some products which are incomplete. They have been worked on. The labor has been spent on them. Overhead has been spent on them. They have consumed materials, but they are not yet complete. They are not yet complete. Now, you want to account for these 2 products, this one and this one, give you the cost at the end of your period. I want us to look at an example. I want us to look at a very simple example. For example, your input. You had an input of 10,000 units. Okay? You had an input of 10,000 units. Out of these 10,000 units, in step 2, out of these 10,000 units, at the end of the financial or the accounting period, you notice that only 8,000 of them, 8,000 are complete. This simply means 2,000 are not yet complete. 2,000 not yet complete, incomplete. Okay? Now, for you to know what you are going to be accounting for, the number of units you are going to be accounting for, you are going to introduce what we call equivalent production or equivalent units. Equivalent production. So in your equivalent production, you are going to use the units. Okay? Now, and here, for you to get that equivalent unit, you are going to now introduce the percentage. At what level of completion a product has been. For example, the 8,000 you will say complete, they are fully complete, so they are 100%. Okay? They are 8,000. And then there are these 2,000 which are not completed yet, but they have consumed materials, labor, and overheads. So you are going to say, let's say, give them a percentage. Let's say they are 60% complete. Now, what is the equivalent unit or equivalent production are you going to be accounting for at the end of the period? It will be therefore the percentage that is fully complete and the part of these incomplete product units and the part of this complete unit in terms of percentage. So that means you are going to be accounting for the 100% units plus the 60% units. This is 100 is 8,000. This is 8,000 plus the 60% of 600 of 2,000. 2,000 units were 60% complete. They were 60% complete. So meaning you want to know what is the equivalent in terms of unit of that 60% that you are going to account. So that one will be 2,000 times 0.6 or 6% or 60%. This gives you 1,002 units. So at the end of the period, these were also units. We will have 1,200 plus 8,000, that will give you 9,000 units. Now, that is what we are going to be accounting for. 9,200 in terms of what the output, in terms of output. I get it. Is that what are you getting? Are you getting? Now, up to that point, I hope you are now starting to understand where we are heading to. You are starting to understand where we are heading to. Now, this accounting for work in progress is always done using two methods. It's always done using two methods. So, the methods for accounting for work in progress. Two methods. That is, this is method 1. This is method 1. Then method 1 is the method 2. Method 2 is weighted. Weighted average method. Weighted average. Now, at a given point, you have used all these methods in your accounting course, but probably not in accounting for work in progress. Today, I want to talk majorly on first in, first out. This is the one we are going to use today. This is the one we are going to use today. And we are going to use an example. For me to make you understand this better, I prefer using an example. So I would like you to follow me keenly. Follow me keenly. We're going to do this. So we are going to use Fifo for today. For today's class, we're going to use Fifo. Today's class, we're going to use Fifo. Now, example. You know Fifo is first in, first out, which means what we are going to evaluate, we evaluate based on the priority of which one came first. We evaluate based on the priority of which material came first. The first. Now, look at this example. The following data relate to process 2 for one accounting period. The following data relate to process 2 for one accounting period. Process 2 receives units from process 1, and after processing, transfer them to process 3. So we have process 1, process 2, and process 3. Okay? Yeah? Then what happens? Now, these are the data we are being given. These are the data we are being given in a particular period. These are the data we are being given in this financial period. That during that period, the opening work in progress was 600 units. These are the units that came from the last period, the previous period of accounting. They were worked on the previous period of accounting, but they were not fully completed. So these are the ones coming in. So we have the items, we have the values, and we have the percentage in terms of completion. Now, input material were valued at 720, 100% complete. Material introduced, 500 shillings, value, 60% complete. Labor, 340 shillings, 50% complete. Overheads, 270 shillings, 40% complete. 40% complete. What do they mean by this thing? What they are saying here? When they are telling you input materials were 100% complete. Remember, for you to produce the product they are talking about here, you have to have the input materials, all the material introduced, and then you have the labor. All this goes into the production of that product we are looking into. All these are going to the production of that product. Meaning, what the percentage represent, for example, labor, how much of labor has been used so far. How much labor has been used so far. For example, if we had 10 units, 10 units, okay? 10 units were to consume, for example, a total of 5 labor hours. Labor hours. Okay? That is 10 units, which means each unit, therefore, each unit is consuming 0.5 hours. Okay? 0.5 hours. But you notice that these 10 units were not fully completed. They were not fully completed. Okay? They were not fully completed. Which means it took less hours. It took less hours. These 5 hours were not all consumed. It's supposed to take 5 hours, but it did not take the full 6 hours. 5 hours. So far, the hours used is, let's say 3 hours. Now this is what we convert into units. That 3 hours is what we convert into units. So we say if 10 units is equal to 5 hours. Therefore, how many units is equal to 3 hours? Okay? Now we ask ourselves how many units is equivalent to 3 hours. Therefore, what is equivalent to 3 hours? Therefore, you take 10 times 3 divided by 5. What do you get? That is 2 times 3, that's 6 units. Which means this 3 hours was enough for the completion of 6 units. Was enough for completion of 6 units. So this is what we are trying to find out. The equivalent unit. This is the equivalent unit. This is what we call equivalent units. Now let us continue. Transfer from process 1, 4,100 units, valid at shillings 5,200. Transfer to process 3 is 3,500 units. Those are the units that are fully complete. The units that are fully complete at process 2 are the ones being transferred to the next step, which is process 3. Now, what are the costs during the period? Now, material introduced 2,956, labor 2,200, overhead 1,900. Closing stock at the end of the production period, closing stock 800 units at the following stage of completion. Input materials 100% complete, material introduced 60% complete, labor 50% complete, overhead 40% complete. Now, there is something here. 400 units were scrapped at the following stage of completion. Input material 100%, material introduced 100% complete, and overheads 30% complete, labor 40% complete. Now, further information. The normal loss is 10% of production, and the scrap units realized 40 coins each. When the waste was sold, they were sold in terms of scrap. So the waste, the things that we could not use to produce anything, the waste were later on sold at 40 coins. 40 coins, that's like 40 cents 40 cents. That's like 40 cents. That's 0.4 shillings. It is required to prepare the process account for process 2 using the Fifo method. So we are being required to use the Fifo method. And number 2, the average cost method. So today we are going to use the Fifo method, and next class we are going to use the average cost method. Let us continue. Now, up to that point, we want to be able to understand something before we start our calculation. Now, there's something they have talked about here. They call it scrap. Scrap. Okay? Scrap is actually the losses, the products, the material that we could not use being sold at a lower price just to help us as a manufacturing company reduce the cost of our production. Meaning, if the scrap is sold, it plays a role in reducing the cost. In accounting for processes, that is our earlier class. In accounting for processes, I explained this very well, so you can go and look at the accounting for processes and find out what is this. Now, meaning there is a loss somewhere. Okay? Scrap comes from a loss. And then in a loss, we have two types of losses. We can either have normal loss, or we can also have abnormal loss. Now, normal loss is the loss we expect. It is the loss we expect. We have already accounted for it. We know we are going to get probably this amount of loss. Abnormal loss is the loss that occurs beyond our expectation, beyond what we expected. Maybe we expected that we are going to get a loss of 10%, but we end up getting a loss of 12%. Our abnormal loss here will be 2%. Our abnormal loss. Okay? Then this will be our normal loss. Okay? But there's something also, there's also what we call abnormal gain. Abnormal gain. What is abnormal gain? Abnormal gain does not mean you don't incur a loss. It simply means you expected this 10%, okay? Say a loss of 10%. You expected a loss of 10%, but you ended up having a loss of 8%. Okay? You ended up having a loss of 8%. So the difference here, which is 2%, we account as abnormal gain. That's what account for. We call abnormal gain. Now I know you have understood those words, those terms. You have understood those terms. Now we can get direct to calculation. We can now get direct to calculations. Now, you have been told first. Now, the first thing you must do is to calculate the production for the period. Production for the period. Production for the period. Very important. Calculate the production for the period. Now, how do we get the production for the period? Production of the period is equal to opening work in progress, which you are given to be 600 units, Okay? Okay? Then we go to transfer. Then we go to transfer. The transfer from previous step, the previous process. So that is transfer from T1, process 1. Okay? You are given 4,100. 4,100 units. Okay? 4,100 units. Then we less. We're closing work in progress. Closing work in progress. What we had not worked on fully at the end of the period. What we had not worked on fully at the end of the period. And that one we were given to be 3,900. Okay? It was 800. So it was 800 units. 800 units. It was 800 units. What do we have? 600 plus 4,100 minus 800. We have 3,900. Okay? Now this one you can write somewhere. You can write it maybe somewhere. So let us say this is working here. So we have production for the period. Now 2009. Okay? 2,900 units. Now we have here we were told about loss. What were we told about that loss? The normal loss is 10% of production. The normal loss is 10% of production. Normal loss. Let us put somewhere here. Let's put 10% of this one. 900 times 0.1. 10%. Okay? That gives us 390. Okay? 2,000 units. Now, from there, we can find out if we have abnormal loss. The normal loss is what we expect. So that one we are expecting to get a normal loss of 10%. But what is the reality on the ground? The reality is we are told about a step. What about step? It was 400. It was what? 400 units. I remember 400 units. sold as scrap. So this is the actual loss. So actual loss, we have 400. Actual loss here we have 400 units. Okay? Okay. Now, what is abnormal loss? Abnormal loss is when you end up losing more than you expected. You end up losing more than you expected. So that difference is what we call abnormal loss. So therefore, we can really easily find our abnormal loss. Abnormal loss is yeah, the 400 units that we actually lost minus the 90 that we were expecting. The 90 that we were expecting. Okay? With the 90 that we were expecting. So what do we have there? We ended up having an abnormal loss of 10 units. I hope we are together. I hope we are together. Hope we are together. Now, having done that, I don't think anything that we need to do. Having done that, we are now going to do what we did last, which is equivalent units. We are now going to calculate equivalent units. We are now going to calculate the equivalent units. Calculate the equivalent units. Calculating the equivalent units. Calculating the equivalent units. We are now going to calculate the equivalent units. Okay. Equivalent units. Calculation of equivalent units. Calculation of equivalent and units. Calculation of equivalent units. Calculation of equivalent units. Now I'm going to calculate the equivalent units. Now, we draw a table. I want us to draw just a table. Under this table, we name first item we are going to have is cost element. That's first thing. And our cost elements include input material, then we have material introduced, we have labor, then we have overheads. Okay? We have overheads. That's there. Then we have complete units. Here, complete units. Okay? Draw it. We have complete units. We have equivalent unit in closing work in progress. Equivalent. Work in progress. Okay. Equivalent work equivalent units in closing work in progress. Closing work in progress. Then we have equivalent units in abnormal loss. Equivalent units. Equivalent units. Equivalent units in abnormal loss. Okay? Abnormal loss. Then we have what we have again is equivalent units in opening work in progress. Equivalent unit. Equivalent unit in opening work in progress. Opening work in progress. Now, after that, then we are going to have the total cost, cost in shillings, and then we are going to have cost per unit. Okay? Yeah? We are going to have cost per unit. Now, before having cost per unit and all that, let us have effective production. Effective production somewhere here. Let's do the effective production. Okay. Just like this, we have effective production. Total effective production. So, effective production. This is what we believe at the end of our period, the total product that we believe this is what we produced. So here we have cost in shillings, then cost per unit. Now, cost per unit. Cost per unit. Now, I want to do away with some parts. This line. Now, we do away with this line. This one. I don't know why. Let's do it one time. Now, what is our total effective production? What is our total effective production? It is complete units plus equivalent work in progress, equivalent closing work in progress, equivalent closing work in progress, plus, okay? Plus equivalent units in abnormal lows, equivalent units in abnormal lows minus equivalent units in opening work in progress. What was introduced to us from the other process. Not what we had prior to this financial year. Prior to this financial period. That's what we call equivalent units in opening work in progress. What we had done last period, but not completed, and then they have been brought forward to this year. That is what is going to bring and give us. This is what gives us total effective production for the period. Total effective production for the period. Okay? Now, let us go back to our question. Let us start with input material and the completion. Completely. We are told here then, transfer to process 3. That is what is completed. What is completed is what we transfer to unit to step 3, to process 3. And we are told it was 3,500 units. So the transfer was 3,500 units. In terms of input materials, it was 100% complete. In terms of material introduced, it was 100% complete. That is 3,500 units. Okay? In terms of material introduced. In terms of labor, we worked on 3,500 units. The whole units were worked on. Then in terms of overhead, the whole units were also. Okay? Okay? We go to equivalent units in closing work in progress. Equivalent units in closing work in progress. In closing work in progress, we were told we had 800 units. We had 800 units. So, in terms of input materials, we are told it was 100% complete. That is 800. In terms of material introduced, we are told that there was 60% complete. 60% complete. 60% complete. 800 times 0.6. We get to 80 units. In terms of labor, we are told it was 50% for this one. 50%. And then in terms of overheads, we are told it was 40%. So 800 times 40%. 40. That's 320. Now we go to equivalent units in abnormal loss. Abnormal loss. Our abnormal loss we had calculated. Abnormal loss is 10 units. 10 units. 10 units. What are we doing to look at this information? 400 units were scrapped at the following stage of completion. 400 units were scrapped at the following stage of completion. 400 units. Remember, this 10 came from 400 units. That was scrapped, okay? So, in terms of completion, input material were 100%. 100% in terms of input material. 100%. That is 10. Equivalent of 10. 10. In terms of material introduced was 100%. So this 10 units was 100%. Then in terms of labor, we are told it was 40%. 40%, that is 0.4 times 10. 0.4 times 10, that is 4. 4 units. In terms of overheads, overheads we are told is 30%. 30% times 3 times 10, 30% times 10, that gives you 3 units. Now, we go to equivalent units in opening work in progress. Opening work in progress. Opening work in progress, we were told there were 600 units. There were 600 units. Now, what are we told? Input material. In terms of input material, they were 100% complete. So this was 600. 100% complete. Now, material introduced, we are told was 60%. So that is 600 times 60%. This gives us 360. 360. Then we had labor. We had labor. Labor we are told it was 50%. 50% complete. That is 300. 300. We are told also overheads. Overheads was 40%. 40%, that is to 40. 40. Okay? So, what is happening is here is that whatever we are getting here is what has been worked on this period. Less what was worked on the previous period. This is what was worked on in the previous period. All these are the work of current period. This is previous period and these are current period. So we want to know exactly what we have at the end of our period, our end of our period. So what do we have here? For example, let us start with input material in total effective production of input material. It is 500 plus 800 plus 10 minus 600. What do you get? 3,710. Then you go to material introduced 3,500 plus 480 plus 10 minus 360 minus 360. That is 3,630. 3,630. Okay? We go to labor. Labor is 3,500 plus 400 plus 4 minus 300. What do you get? 3 or 6? 3,604. 3,604. Okay? That's what we get. Then we go to overheads. Overheads we have 500 plus 20 plus 3 plus minus 240. We get 3,583. 3,583. Now, cost. Now let us now look at the cost. Look at the cost. We start with input material. Input material. Remember, input material is what came from the other step, the other process 1 in our case. Process 1. That's what came from process 1. That's what we call input material. What comes from process 1 is what we call input material. So what comes from process 1 were valued at shillings 5,200. Valued at 5,200. This is the question. Transfer from process 1 was 4,100, valued at 5,200. Okay? It is not 4,100 as per se because of the losses you have encountered. You see the losses? Yeah, the losses. That's what makes it less than what we are talking about. That is 4,100. Okay? Then we have material introduced. Material introduced for the period was 2,956. Remember, we are using what you call Fifo. Okay? That's what we are using. We are using is called Fifo. Now, this is what I'm talking about. The material introduced was 2,956. Okay? But remember what I told you. Whenever there is a loss and you end up selling that loss, the proceed from the sale reduces the cost of materials. So here our loss was sold. Our loss was sold. At what price? The loss was sold at 40 points, which is equivalent to 0.4 shillings, 0.4. Which is equivalent to shillings 0.4. Okay? So what we have here is, therefore, our total cost of material will be, our losses will be 90. Our normal cost times 0.4. Okay? Let us do the math of the okay? That will be 90 times 0.4. Okay? So this is 956 minus 156. Minus 156. What do we get? There's a reason why I'm doing this. There's a reason why I decided to write that 156 down without just doing everything in the calculator. So that is 29, 56 minus answer. Yeah. This gives us 2,800. So our cost here, material introduced, the cost of material introduced is 2,800. Now we go to labor. The cost of labor for the period was 2,200. That one was given 2,200. Overheads will be given as 1,900. That's the cost for the period. Now, what is the cost per unit? We can now find the cost per equivalent unit. We can now find out the cost per equivalent unit. So, total effective cost per unit for the total equivalent effective units production. The total effective production cost per unit will be therefore this cost divided by our total effective production. That is 5,200 divided by 10. This is 1.4. Then material introduced, cost per unit, that is effective production, and that is 2,800 divided by 3,630. You get 0.771. Now, labor. The rate of labor per unit, is 2200 divided by 3604. This gives us 0.61. Then overheads 1,900 divided by 3,593. And this equals 0.53. Now, up to that point, we have the rates. Now, what is next? What next is now preparing the account. Okay? When you are preparing the account, when you are preparing the account, now let us start preparing the account. Let us create some space. I'm going to run from here. I'm going to run from here. I'm going to run from here. That part going to help us. So let us name this part. Let's name this part. This one was input material. This is input. Input material. This is input. Material. This one is material intro. It's a material intro. This is labor. And then this was overhead. Overhead. Yep. Now, let us start with the process 2 account using Fifo. Process. This is the T account, so this side becomes CR, this becomes CR, the T account. We debit and we credit. Now, we have items. We have items, we have units. We have units, then we have amount. Amount in shillings. Then we have again items, we have units, then we have amount. Okay? Now we have opening work in progress. We have opening work. Opening work in progress. Over 600. Over 600 units. There are 600 units. Now, what is the value? What is the value? What is the value? Opening work in progress. Where is it? Now, we have opening work in progress. Opening work in progress. Value at. Value at. We have input material. We have material produced. So, we calculate this. Go back to working. Input materials. Input materials. Input materials. We are being told to do 720. 720. Material introduced. material introduced. We're being told it's 500 shillings, 800. Then we have labor, of which we are being told is 40. We have overheads. Overheads we are being told is 70. Now, this plus this that's 0. Okay? Yeah, that is 0. Now we can just make it in the calculator to make the work easier. Just do it on the calculator to make it work. 720 plus 500 plus 340 plus 70. We have 1830. 1830. So here we have 1830. Then we go to what? We go to transfer from process 1. From process 1 is 4,100. 4,100. We are told this is 5,200. Because it was 2,000, the value is 2,500. Then we had the labor, the material introduced. Material introduced. Material introduced is 29,560. Material introduced for the period was 29,56. 29,56. That one we were given. Labor we are told to be 2,200. 2,200. Then when we have overheads, overheads which is 1,000. And because in our question we did not encounter any abnormal gain. Because we did not encounter any abnormal gain, what we do, this becomes our final. We just add. So this becomes 4. Again, this suppose 700 units. And this what this becomes. Let us do the addition. It's 1830 plus 5,200 plus 29,56 plus 2,200 plus 19, 0. And this will give us 14,086 shillings. Okay? Now, from there we want to balance this side. Now, transfer to process 3. Transfer to process 3. We were told it is 3,500. Remember, we were told it is 3,500. But do we know the value? No. We are going to find out what is the value. We have the normal loss. remember, we were told it was sold at a given price. It was sold at 0.4. 0.4. We were sold at 0.4. And on our calculation, remember, our calculation we got that number. 390 times 0.4. So this is 156. Okay, 156. Hope you are following. 156. Then we also have abnormal loss. Abnormal loss. We have 10 units. Okay? We have 10 units as abnormal loss. Remember, abnormal loss is something that we were not expecting. It comes without our expectations. Therefore, this abnormal loss, when we are accounting for it, we equate it with the goods that we produce that we believe met the standard. We equate it with good production. We equate it with good production. We equate it with good production. Now, that's where now this transfer process comes from. So therefore, at that point, we still don't know the price per unit. Then we had closing work in progress. Closing work in progress. Work in progress. Closing work in progress. We had 800 units. Now, do we know the value of closing work in progress? Not yet. But can we find out? Yes. Okay? But even this one, I remember, this one we had already calculated. We had already abnormal loss. Where was the abnormal loss in our machine? Abnormal loss. Abnormal loss. Abnormal loss. So, up to that point, we want to find out the price of the abnormal loss and closing work in progress. How do we find out? How do we calculate these two? Let us create a space for that. Let us create a space somewhere here. Okay. Now let's start with closing work in progress. Closing work. Closing work in progress. Let us find out the value. We have the input material. Other input material, this is what here. Remember this table that we left. Input materials. In other input materials, we had 800 units. Equivalent of 800 units. What is the input material? The cost of input materials per unit, the cost of input material per unit is 1.402 times 1.402. This one. Okay? This gives us calculator 800 times 1.402. We get 1121.6 sheets. Okay? Now we also had material introduced. Material introduced. Material introduced, we had an equivalent of 480 units. What is the the cost per unit. Cost per unit is 0.771. 0.771. 0.771, that's for 80 times 0.771. You get to 70. Get to 70.08. Get to 70.08. Then we had labor. Remember, labor was used. Labor. Equivalent of labor. We had equivalent of 400 units times 100 units times cost per unit 0.61. Cost per unit 0.61. That is 400 times 0.61. That's 244. This gives us 244. Then we had overheads. Overheads, we had equivalent of 360 to 20 units. 20 units to multiply by overheads is 0.53. 20 times 0.5, 169.6. 169.6. Now we can get the total. So plus 244 plus 370.08 plus 1121.6. I get 1,905.28. So let us round it to the whole number, the nearest whole number, the whole number. That gives us 1,985. 1,905. 1,905. Now, 1,905. That becomes the cost of our closing work in progress. So our closing work in progress 1,905. Okay? What else? We have abnormal loss. Let us do this. Now this side we do abnormal. Abnormal loss. The same process. We have input materials. So equivalent was 10 units. Equivalent of 10 units. At what cost per unit? What cost per unit is here. Give 1 times 1.402. This gives us 14.02. We had material introduced. Material introduced we had 10%. We had 100%. That is 10 units. 10 units times material introduced is 0.771. So this gives us 7.71. 7.71. Then we have labor. Equivalent unit. We had equivalent unit of 4. Remember 40%. Times labor is 0.61. 0.6114. That is 4 times 0.61. That is 2.44. 2.44. Then we have overheads. We have overheads. So overheads here, we had the equivalent of 3 units. It was 30%. 3 units. Multiplied by overheads is 0.53. 0.53. So 0.53. That is 3 times 0.53. That's 1.59. 1.59. So what is the total? What is the total? What is the total? The total is plus 2.44 plus 7.71 plus 14.02. That gives us 25.76. Round it up to the whole number, that is 26. So our abnormal loss had is the value of 6.26. Now remember we are balancing. Let us balance. Okay. This one is 35 plus 90 plus 10 plus 800. That's 4,700 plus balance. 4,700 plus balance. Right? Plus balance. Now, this also have to balance. This also have to balance. So here we also have 0.86. 0.86. So transfer to process 3. The product transferred to process 3. Someone might ask, why could we use this? What we had here? No, we cannot use it because what we are using here, the method we are using here is Fifo. We take what came in first, the price, the value of what came in first, what followed, and what followed step by step. So we cannot singularly point the value of our food transfer to process 3 because it is made of opening marking problems, transfer from process 1, and also material produced that were different cost. So for us to get the value of transfer to process 3, therefore, it is what balances our account. It is what balances our account. So what balances our account is 14, 0.86 minus 156 minus 26 minus 1905. So what you get here is 11,999. That becomes the value of our transfer to process 3, or the value of our product, final product for the period. Thank you for following. Thank you for watching. Thank you for staying attentive. And the next class we are going to use the average method. See you then.